growers will have to look at what is their least worst option in terms of planting.
Hi again, everybody. Welcome back to the Comstock channel. I'm Marlin Bohling with you. Always a pleasure to get to visit with you each and every weekday. Appreciate that very much. Make sure you like these videos, subscribe to them by clicking that bell icon down below, and then share these videos with others as well. Today, my very special guest happens to be John Devine, and he is the chief economist with Cotton Incorporated. He's based in Cary, North Carolina. I used to live out in that area there, and Cary is just on the southwest corner of Raleigh, the capital city of North Carolina. And actually, that is the supreme headquarters when it comes to the cotton industry. They have lab research they do there, and all kinds of stuff related to the cotton industry. John, I appreciate you coming on board. I wish we had better things to talk about, but in this case, it seems like the U.S. cotton industry is under attack from all sides right now. We're having, competition around the globe. We're having some weather issues right now. Let's talk about Hurricane Helene that's going to be coming up through the southeast. Is this a good time or a bad time for that to be coming through?
Well, it's probably about the worst time. So for your viewers who aren't familiar, of course, cotton bolls open, and that's when we have the fiber out there exposed to the elements. It's a time period when we don't want any moisture, and certainly don't want in the combination of wind and moisture. Moisture can affect our cotton quality, particularly the color can be affected with rain falling on the open fibers. Also, if things get too heavy, and particularly if there's some wind out there as well, we can see some bolls get knocked to the ground. So in addition to quality issues, we also can have some issues associated with yield loss too.
And in that case, it's non-recoverable. I mean, it's not like you can go back and pick it back up later on. You talked about the quality concerns from that. I mean, yeah, it could blow some of the bolls off of the plants, but it tends to make the cotton kind of a yellowish color, doesn't it? If it's exposed to rain quite a bit while it's kind of in that ripening mode.
Yeah, it tends to look a little bit dirtier. So, you can see, the cotton fibers get stained and get mildew in there, so it can get her gray, black too. Big concerns there. You also can have seeds start to sprout within the bolls, which, creates problems too in terms of immature fiber content that potentially can get in there as well. So it's a whole range of potential quality issues, and now it's just not the time when we're looking to get any rainfall. And when we take a look at cotton production, our number 2 state is Georgia. A lot of that's in the southern and particularly southwestern part of the state there. And unfortunately, that looks like where Hurricane Helene is going to pass directly over. So we're certainly wishing our growers the best of luck, but it doesn't look like a great outlook for them here over the next couple of days. A potential benefit or a potential thing that can happen later is if we do have good sunshine that follows the storm, it can dry out the cotton fiber and hopefully bring some whiteness back into the cotton fiber, into the bolls, which can help improve or lift those quality grades.
Yeah, that brings up, that's a good point. We've talked numerous times on this program about how Texas is the key production area up in, the southern Texas panhandle, let's say, around Lubbock and that area there. That would be like ground zero for production. Now, they won't be impacted by this, but I just wondered from your observation here of this storm coming in, what kind of a percentage of the nation's crop are we looking at that could be impacted by this storm? It looks to be a big storm.
Yeah, I mean, it's a big storm, and Georgia's number 2, but they are distant number 2 to Texas in terms of production. So, if we take a look at Georgian production, generally we get somewhere between 1 million, 2 million bales coming out of Georgia. And we'll see a percentage loss from this. So it is important. It would be, probably potentially several 100,000 bales could be taken out of U.S. production. But we can compare that to other weather issues that have been existent in the Cotton Belt for the past few years, notably dryness out there in West Texas. The effects of hurricanes are smaller than that. So when we take a look at the drought that has persisted in Texas for the past few years, it's probably taken anywhere from 3 to 4 million bales out of production or potential production. Of course, which is much larger than probably taking a look at these losses from our hurricanes, but that's not to diminish of course, the losses that can occur on individual operations. And we're certainly thinking about all the producers out there in Georgia right now.
Cotton production is pretty widespread. I mean, it'll go all the way from the southeast coast where the hurricane will come ashore, all the way up to, what do you figure, Kentucky, and then eastward toward maybe the Virginias?
Yeah, so I mean, you take a look at the areas that are potentially going to be affected here. Of course, the Georgia is right, in the bullseye, but then production in Alabama also can be threatened, and extending up to potentially to Tennessee. So, there's a lot of heavy rains expected to come, and production. We take a look at our regions, the southeast growing region, which is from Alabama up to Virginia, so it's probably going to take the hardest hit, but also our mid-south region, which is more along the Mississippi River, also could take some effects from the storm as well.
So I was looking at the new crop cotton contract. That would be December. And it just seems like it hasn't really reacted much. Can you explain why the market is ignoring this hurricane?
There's been some important changes in the cotton market here over the past, I would say decade or so. And one of them has been the emergence of Brazil as a major competitor for U.S. cotton exports. So in Brazil, they've done this double cropping harvest system that they have in place down there, and that enables them to plant a soybean crop, then follow it either with corn or cotton. And due to that ramping up of the cotton that's been following that soybean harvest, we've seen a dramatic increase in Brazilian production. It's more than double what it was just going back 10 years ago. At the same time, we haven't seen Brazilian domestic consumption increase very much. So the bottom line is a lot of increased competition on the export front for our shipments. And Brazil's looking at another record crop in this crop year we just started. And the availability of that Brazilian supply is diminishing the impact of the concerns about a hurricane on prices.
So let's take a look back. Last winter, we had nearby cotton, like, what was it, $1.05 a pound, I believe. What happened since then? Has the demand just dried up?
Well, the market's kind of done a complete 180 in terms of the storyline. I think that's been driving price direction. So if we go back to the winter and even early spring of last year when we did have those strong prices you're talking about, the market was concerned about there not being enough exportable supply. So last year, we had probably the low point in terms of the drought effects out there in West Texas. We had this really small crop. It's actually the smallest we have going back all the way to the 1980s. It's just a little bit below some of the crops we had about 10 years ago, but in terms of absolute terms, it's going back a couple of decades. And a lot of that's was bought up by China. So China, and in particular the Chinese government, came in last year as a very strong buyer. They're taking up a lot of U.S. cotton supplies as well as exportable supplies from competitors like Brazil and Australia. And since China was so aggressive, and since reaching a point where maybe we were getting close to being sold out here domestically, that helped light a fuse that put a fire under cotton prices last year. But take a look at the current situation. We have this record Brazilian crop coming in. Our crop's expected to still be a couple million bales larger than it was last year. Australia is going to have a big crop. Other export competitors also expected to have decent crops in the current crop season. And at the same time that we have all this exportable supply being available, we're taking a look at China pulling back from the market as well. So, about 6 or 8 months ago, we were looking at concerns about there being not enough exportable supply out there. Now we're looking at there being too much exportable supply chasing limited import demand, and that's been weighing on prices.
Here's another sledgehammer topic to discuss. Next Tuesday, there's a threatened longshoreman strike that would cover the entire eastern seaboard and all around the Gulf of Mexico to Texas. How much would that impact cotton? Do they ship cotton by container?
Yep, we ship a lot of cotton by container, and about 85% of our production is exported too. So, constraints on exports aren't going to help. We need to get that cotton fiber out, and so any strike action, probably won't be helpful.
So what could that do to the price? I mean, even if foreign buyers wanted our cotton, they couldn't get it, right?
Yeah, so we could create some delays throughout the supply chain. But something else that's a factor out there too is the supply chain has been a little bit sluggish. Macroeconomic conditions, haven't been terrific here for the past couple of years since interest rates have started to increase. And I think when you take a look at the import situation, we're talking about exportable supply chasing import demand. That weakness in downstream orders due to macro conditions is something that has been weighing on the market and on prices as well. So that would be a mitigating factor. The strike's not going to help, but the fact that the overall just demand environment isn't really super strong will probably limit some of the effects there.
Well, here you are, the senior economist, and I'm sure you've been talking with producers about profitability this year. They had an opportunity to lock in some pretty decent prices last spring. Don't know how many took advantage of that. We've been talking about how corn and soybean farmers are having maybe a hard time breaking even at all this year. What about cotton, guys? Do you think cotton producers really took advantage of the market they had?
Well, I certainly hope so. Our producers, they have some experience having to leverage options that they have out there, like crop insurance, which is going to help them, lock in revenues for an upcoming season. And, we do hope that many of them were able to do that when prices were a little bit more favorable around the February time period of last year. But even if they can get some help on the revenue side, the biggest issue out there is really what's been going on with costs. Input cost estimates are showing, um, prices for inputs up about 30% relative to where they were pre-pandemic. And if you take a look at price levels where they are right now, they're about pretty even where they were pre-pandemic. So, the bottom line is that it's a really challenging situation out there right now in terms of profitability. True for our cotton producers, but also true for producers of a whole range of row crops.
So, John, you talked about the ramp up in production in Brazil. And there's a lot of talk about how they're having a dry early planting season in Brazil right now. Well, cotton is pretty drought tolerant overall if you can get it to come up. Uh, does that present the potential for increased cotton acreage in Brazil if things aren't looking all that great for corn production, maybe?
Yeah, it certainly could. I mean, there's a little bit of time. So if you take a look at the planting of that second crop cotton, we're still a few months out from that. So, we'll see what can happen. But if it is affecting their planting of their first crop soybeans, then yeah, that can also be a factor that we'll have to watch in Brazil in terms of what are they going to choose to plant. And it will be interesting to see because this is really going to be the first year that we see a big challenge on the profitability front for Brazilian producers as well, and what decisions they might choose to make with prices being lower and their input costs also going to be higher too.
So does this kind of raise a fear that maybe our cotton acreage next year will be reduced if we don't have very good prices right now?
That's what our producers are telling us is that we're looking at the potential for a pretty steep drop in planted acres here for the upcoming season. Potential, mitigating factor there in terms of acreage decisions is that there's just, and it's unfortunate, there's just not a lot of good choices out there. So growers will have to look at what is their least worst option in terms of planting. Some of the costs for cotton can be a little bit higher than some of the other row crops. And, the increased input cost for cotton may present, more of a challenge. They may see some migration away from cotton towards other crops just because the cost side maybe presents a little bit less risk.
All right. Well, John, great to talk with you again. Thanks for all the insight into the cotton industry and the cotton markets from several angles. Great job with the information. I appreciate that. We'll talk with you again soon. That's John Devine. He's the chief economist with Cotton Incorporated in Cary, North Carolina. That'll do it for this episode. Thanks again for joining us. For producer Brianne Hendrickson, I'm Marlin Bohling. We'll catch you next time on the Comstock Channel. Futures trading involves risk. The risk of loss in trading futures and/or options is substantial, and each investor and/or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.